Hello everybody, hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Wednesday, ladies and gentlemen. Yes, it's the midweek of trading, midweek of market action, and yes, we have plenty of action happening in the markets. Look, I'm going to talk about all that in a moment, so hopefully you'll enjoy the session. This is a quick video preview for the webinar, which is going to happen in a few moments, so stick around, hopefully you'll enjoy it, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today, ladies and gentlemen, is the 4th of March, 2026. It is Wednesday. It is midweek. So yeah, we're still in the first week of March. I hope. I hope it's going good for you, honestly, because in general the markets are really shaky, and we all understand why, and of course we're here to dig in and to check out what's happening, but at the moment we kind of understand what's happening. So what? Let's have a look at the let's have a look at the charts. Let's see what are they telling us, and also let's pick up on some economic data sets which are kind of overshadowed by the ongoing conflict. Look, before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I'm going to put the usual good morning in the chat room. Good morning, everyone. There we go. So yeah, ladies and gentlemen, yes, we are, like I said, we are in the, I think it's the fifth day, or no, wait, it's the fifth day now of conflict, the conflict. So yeah, go figure what's going to happen next, but look, we're going to look at the charts, okay? Because for me right now, when you don't know what's happening, you look at the charts, the market is telling you exactly what it wants to do. So look, before we go any further, as always, let's quickly have a read through, actually not a read through, sorry, we already did the read through, a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us, we'll be more than happy to assist. So, the economic calendar, as always, let's pick up very quickly on that one, and then just want to go through Tuesday very quickly because we had some data there. Let me just refresh the calendar. It seems like the data is not showing up. So the Tuesday kind of kicked off with the Japanese numbers. So unemployment rate came out at 2.7 against the previous 2.6. So that's not very good for Japan in a way, although don't get me wrong, it's not critical. Still, 2.7 is not a bad number, in comparison to what you can see in other major kind of developed economies. So yeah, it's like I said, it's this is what we got. Australia also came out with some numbers here, not very maybe significant. European Union, the estimates, the inflation estimates, the year-on-year headline number 1.9. Increase, yes. So this is now, the question is, what's going to happen next in terms of this? Is the Central Bank of Europe will take it a little bit more seriously, or actually, or are we going to stick to the same policy of like not moving the rate in a way? Look, in terms of like not moving the rate to the downside, for example, like not cutting it further, that has been, I think, the logical approach in a way, because everybody understands, inflation will pick up, and due to the current situation in the Middle East, we can understand that inflation, it will pick up again, and it will have its effect. We just need to go closer to summertime, right, when the data is going to start shifting, and yeah, then we'll see some higher numbers, and then the question is will the central banks push further away from cutting rates? And look, I think I said it before. And I honestly, like last year, I kept on talking about this in my videos, that I do believe that inflation will pick up. I mean, it's not a secret, and I think that a lot of people believe that, because it cannot sit like at lows all the time, and again, especially with the current situation. So are we going to head into something like called like a stagflation? That's a question for maybe like next year or something like that, because I think this year could be a little bit more for inflation to start rising and everything. Unemployment will start dropping. This will all affect growth, and that's where the problem might arise. And again, it's going to be an interesting moment that we're going to go through, in my opinion. And are we like, basically, am I leading to a financial crash of some sort? Kind of, yeah. But I don't want to say that, I don't want to be one of those people that are going to, continue saying, yes, the financial crash is coming, and for the next 10 years, you're kind of keep on saying that, and it's not happening. And then like in year 11, it happens, and you're like, see, I told you so. For 10 years, right? Anyway, so I don't want to, like I said, I don't want to be that person, and that's why for now I'm going to say that let's not rush into conclusions. Let's just have a cool head on our shoulders, and approach markets with caution, and just kind of, there could still be some upside, don't get me wrong, because I think that once these attacks kind of from the US and Israel finish, maybe then this is where the market could stabilize again and go back up. However, for now, what we're seeing, yes, it's just mayhem, and just benefiting the interests of a few. Look, in terms of economic data, going further, so yes, what did we have yesterday? Not much, actually. We had some speeches from Kashkari, from Williams, there we go, Fed officials. Now, in terms of today we got the S&P Global Composite and Services PMIs from Australia, and those came out on the lower side, ladies and gentlemen, lower than the previous. Yes, higher than the forecast, but the forecast, I would say, was already on the lower side. So it beat the forecast by a little bit, but it's still lower than the previous. Australian GDP growth rate is 0.8. Not bad, not bad. Doing good, Australia, doing good. And then we had some Chinese numbers. There we go. NBS manufacturing PMI, there we go, 49, still in contraction in territory. NBS non-manufacturing, 49.5, just kind of very close to, jumping back above 50, but no. Rating dog manufacturing PMI. Now, this one is a little bit more optimistic. So the NBS is more, maybe somebody could say, realistic, and the rating dog numbers are a little bit more optimistic. So again, we'll see how that plays out. For now, I think the Chinese issue is to get those ships, safely through the Strait of Hormuz, ships with oil, because again, this is, we know that China is buying a lot from the Middle East. Well, actually, everybody's buying. What am I saying? Everybody's buying from the Middle East, and the Strait of Hormuz actually is the place from where. Through which a lot of oil passes. I think it's like something like 20-30% of the whole globe. No, around 20% of the global, trade. Okay, look. In terms of, like I said, China, I think China is okay-ish for now. The only problem is that for China is that, look, if they're not able to get those LNG supplies, they're not able to get the oil supplies. Now, this is where I think the plan, the U.S. is kind of could work out, because they're really trying hard to have China, weakened as well. So that's why you have your attacks on Venezuela, you have your attacks on Nigeria, and now it's the last component is well, actually not the last component, but one of the last components is Iran. So if you in this way you cut off China from cheaper oil, and you destabilize the economy. So a little bit sneaky. I mean, we understand that this is like this is look. If it would have been happening the opposite way, I think there would be more fury in the world, right? I mean, but when it's happening that way, so it's okay. So it's like, anyway, so this is the hypocritical world that we live in. But look, long story short, for now, we're watching, of course, the developments carefully. We're watching the economic data. So inflation, by the way, came out in Switzerland on the positives. Actually, the same as previous. Okay. What I'm watching today, European Union unemployment numbers are coming out. So we'll see how that's playing out. But ADP. US ADP, one of my favorite metrics right now in terms of trying to understand the labor market in the US. And the current expectation is a double from the previous. Let's see what we're gonna get, because if we somehow get a negative number, that would be just I think that would be a little bit of a shock to the market. Yes, despite all the events which are happening. I think that that the market would not really like that. If it comes out above zero somewhere, I think that the market will just kind of ignore it because of what's happening right now in the Middle East. But if it comes out on the lower side, I think this would be a bigger bomb in a way to the market from the economic calendar. From the economic data, and this is the thing. This is what could make investors worry. And in terms of other data sets coming out today, S&P Global Composite and Services PMIs, there we go, from Canada. We don't have a forecast, but we know that the previous numbers remain in contraction territory. The same story with the US, but those are in positive territory, or sorry, in expansion territory. And we are expecting slightly lower numbers than from the previous, so let's see what's going to happen. But the thing that the king of the PMIs is going to be the ISM Services PMI, which is going to come out half an hour after the US opening bell. And at the moment, the expectation is for a slightly lower number. But look, well, I'll say it this way again. If it gets closer to 50, I think that's a worrying signal. I think that's a worrying sign. So we'll keep a close eye on this, because again, if you imagine this, you get ADP below zero, you get ISM closer to 50, it's not looking good. Like it could just continue with the further decline in the market, in the stock market. Sorry, went blank there. But yeah, so keep your eyes on that. Now, again, EAI crude oil stock change. Now, this is something that I'm going to be very interested to see what's going to happen. The forecast is for a lower number. So let's see how low it will be. If somehow it comes out in negative territory, then, well, I think we could see oil actually shooting up nicely to the upside. Let's keep an eye on that one as well. This number normally I ignore most of the time, but today I think it's going to be an important one. So yeah, and apart from that, that's kind of it for for the day of today. On Friday, don't forget that we're getting the NFPs. Just throwing it out there. Anyway, let's have a look at the charts. Ladies and gentlemen, the sell-off continues. Now, on Monday, I talked about this, and I said that to me it looks more like a little bit of profit taking, and there we go. It's the profit taking continues, and the Asian sessions are in negative territory, and they're not really loving the action. They're not really loving the situation, what's happening, because in a way, if you look at the stock market, right, the US is still holding off. it's still holding okay-ish. They're moving a little bit to the downside, but not as significantly. Whereas Asia is, yeah, it's suffering. We saw Kospi as well. Look at it, Nikkei dropped to 3.6%. Kospi just dropped to minus 12%. Look at this. This is the worst day that they ever had in history. This is the worst day in history for them, as I understand. That's a major blow. Now again, somebody might start panicking, but Kospi is still. Let's measure that. Let's measure how much we are still in profit for the year. There we go. There we go. From here, there we go. So we are still around 20% in profit for the year. Okay, we were 50, so we shrug, like we took out like the 30%. We took out 50%, but yeah, it's still 20% in profit for the year. Look, do I believe that there could be more downside? Yeah, I think we could end up maybe traveling to here somewhere, and we could end up like being with a 15% gain for the year. But let me actually just put the entry here. This is where we started is this correct? Open price 24. No, wait, just a sec. This is where 4224.53. Let's mark this level. This is where we started the day. There we go. Yeah. So look, this is where we started the day, the year. This is where, like I said, this is how much profit we're still in for the year. I think, like I said, there could be more downside. Kospi, like I said, did rally like crazy last week. I was actually still talking about this one, and I said that keep your eyes on this, because eventually what comes up must come down. And like surprise, surprise, the military action started. So in general, the big plan to weaken Asian markets so far is working. So look at this, Shanghai Composite also went higher, tested the 4,190 territory. I talked about it. I said that I need a good clearance of this area in order to go further north. And did we get the test? Did we get the break? We got the break, but we failed to stay above it. So there we go. We're having that major, blowout here and sell off. So what I'm watching at this point, I'm watching this little hurdle, this 4,080 zone, because that's that marks the low of the 20th of January of this year, and so far it seems to be like it's providing good support. So if we do break this area, then yeah, I'm going to go further south. I'm going to go for this lowest point of February, and I think yeah, that's the lowest point of February. So good potential target, but again, I need a stronger clearance below this 4,080 zone. And if we do rebound from this area, okay, wonderful. The only thing is that my positivity most likely will come if on a push back above the 20-day SMA here within my Bollinger Bands. Yeah, pretty much that's my simplistic approach here on this. Look, like I said, Asia right now is suffering. Nikkei, as you can see, is near a fantastic area of support right here. This upside line drawn from the lowest point of April. Remember this day? This is when the big board was next to the big board of tariffs was next to the head of the U.S. leader, and there we go. So that was the big decline, but then we recovered strongly. We pushed higher, moved to the upside here, but now it's time to see if we can rebound from this this upside line. If we can, great. I'll go higher. But if we struggle. If we struggle to remain above this upside line, I think what I'm going to do here is I'm going to go to the downside here. Yeah, if we break this upside line, I think this is going to be the opening door to slightly lower areas. Initially, of course, we'll target the 100-day EMA shown as the blue line. And we'll just take it from there. So, and then maybe we'll go towards this 200-day EMA. Let's see. Let's not rush into everything, of course, but just Yeah, keep your eyes on the on this upside line. Let's jump into Dow Jones Industrial Average, ladies and gentlemen. So look at this. I mean, this is what I'm talking about. So this is like Asian markets are selling off. This one is just enjoying life in a way. Like it seems like military companies are really doing the trick, really doing the trick. So yes, airline companies like for example, AAL. Let's have a look at this one. Yep, and then Southwest Love. There we go. That's the ticker for that. Yeah, they didn't love the whole attack, but Delta Airlines. What's their ticker? DAL. There we go. DAL. Yeah, they all sold off, but now look at this. They're all recovered. By the way, Lufthansa, yep, Deutsche Lufthansa. Yeah, the European ones are not very happy about this, of course, and they do KLM, for example. Let's have a look at KLM. This is gonna airline, Air France. I think it's Air France, KLM. Yeah, that's the one. So also look at this, all getting a major hit, since on Friday they reversed lower. Look at this, as if they knew something's happening. And today we're seeing a little bit of recovery, but not much. We're still holding basically near these key areas of support. So the interesting bit is, like, if we're going to continue to holding here, maybe we could see a nice little rebound back up. Let's see. Anyway, keep your eyes on this, because again, like I said, at the moment the airline companies are not really loving it. The ones who are really loving life right now are stocks like these, like LMT, RTX. But I'm seeing a little bit of profit taking. So the question here for me right now is it going to be a short-lived conflict? Basically they're going to come out saying that, oh, mission has been accomplished. We took out the supreme leader. So it's like, great, wonderful, right? So look, because in general, I think people will kind of see this as way too obvious, because you start off the war. These usually companies like these benefit. So Northrop, where's that? Northrop Grumman. Wait, Grumman. Yeah, that's NOC. So there we go. So we're seeing a little bit of, like I said, profit taking, and after these major spikes here to the upside. What can I say? It's we're also getting closer to dividend pay. Wait, we passed the dividend pay. There we go. Anyway, but this, like I said, I think that there could be some more upside for these companies. These Palantir as well. These amoral kind of companies that provide surveillance on humans and everything. But look, for now, I can say it this way. We're watching this very carefully. We're watching the situation here very carefully. These companies, of course, yes, are benefiting, and in a way, kind of, they're holding the stock market as well from moving lower. By the way, companies like NVDA, that are rebounded recently. Microsoft, these guys here pushing. Okay, these are guys rebounding, so showing some positivity, and that's what I'm saying. It's like, by the way, what's Google doing? Let's have a look at Google. Yeah, they had their little declines. Now, okay, I am probably that little contrarian, who's going to be very careful about saying, about further declines. For me, to see further declines, probably what I would need to see is total blockage of the Strait of Hormuz, and no one can get oil out. That could be something that could cause problems, because if China cannot get the ships out, because again, we know that China can get the ships through, but if even China cannot get, I think now that's where we will see the stock market really taking a hit. So long story short, This is the thing. Looking at the Dow here, the 50,000 that the U.S. leader was really bragging about recently, actually, like last week, the week before that, is now is now back to closer to 48,000. At one point yesterday, it was even below the 48,000. It was below the 100-day EMA here on the daily chart, and so far in general, the 100-day EMA has been acting as a strong area of support. However, we've shaken this line already. So the question is, are we going to see some sort of a further follow-up? But for me at this point, what I'm looking at purely from the technical side, I need to see a drop below the 48,428 zone, somewhere around here, marked by the low of the 20th of January. And then, yeah, we could just kind of go from there. Look, the lowest point of this year is here. Actually, was the lowest point of this year at 47,853. We yesterday surpassed that very briefly, and we dropped, but then we quickly recovered. So looking at the Dow right now, let me just double check what's happening. On the cash index, we're seeing the 48,300. That's what we're flirting with. So basically, we're below this hurdle, but we're still above the 100-day EMA. Now, if the negativity in the headlines, actually, I will say, it continues, I think that yes, I think that we could see further declines, and maybe Dow could fall below the 100-day EMA. So at this point, judging purely from this price action, this looks like a possible reversal. However, if we remain below the 48,428, I'm leaning a little bit more towards the downside, but maybe not, let's say, radically to the downside here. Just aiming for the 100-day EMA and then the previous lowest point of this year. S&P 500. So yes, also look at this. Look at this. This is amazing. This is, like I said, very, very interesting to watch. We had a major drop yesterday, very quickly reversed back up, and we went back into the box here, went back above the 100-day EMA. So in a way, it's like the market is not really giving up. That's what it's trying to tell us. Currently, the cash index on the S&P 500 is currently trading around 6,790. So we are basically here around that 100-day EMA. Now look, at this point, like I said, I'm still somewhat kind of positive because look, this worked out. First of all, okay, this worked out. This idea worked out. Now for the next idea, if we continue to trade above the lower side of this box, the range, then yeah, I'm going to consider a move back up. In general, I'm not, like I said, I'm not really getting bearish yet. I will go slowly on the. If I do see a clearance of this lower side, then yes, of course, I'll start shifting my attention more towards lower levels. But at the moment, we're not seeing that. So let's see if this is gonna hold. Let's see if this can hold in a way. If it can hold, then amazing. I think that yes, more buyers here could take advantage of the lower price and kind of push back to the upside. Let's see. Again, not saying anything for now, just observing the price action. NASDAQ very quickly. NASDAQ, yep, also look at this, cleared the lower side of this little range, but then quickly pushed back in. So it doesn't seem like I said, it wants to go further south. We're currently seeing the index a little bit on the lower side here, but again, if we somehow stay inside the range here, then I think that there is a possibility for a rebound back up. Let's jump into the German index DAX. Look, a little bit of slowing down in the selling. Yesterday was a bad day. Look at this drop here. The lowest point of this year, and I'll show you where it is. Let me just find it very quickly. This is the one right here. This was the lowest point at 20. Just let me zoom in here. At 24,449. we surpassed that by a lot, and now we're in negative territory for the year, ladies and gentlemen. If I'll jump into a monthly, there we go. You'll see that clearly. So, what I'm looking at here, I am looking for something interesting around the 200-day EMA. If we somehow today push back above the 200-day EMA and stay above it, I think there is a possibility for something like this, working out, where we could see a reversal here, a reversal back up, and a retest of maybe some of these key breakout levels, key support, previous support levels now, turning into resistance. So my next target will be the 24,266. Look, but for that, I need to see the index staying above the 200-day EMA. The FTSE. So yes, had a big decline here. Yes, delete alert. It worked out. A big decline, and we're seeing a little bit of a slowing moment today. We're seeing a little bit of retracement today, so maybe we could see a push back up here given the sharp decline we saw yesterday. Maybe a little bit of a retracement back up towards the 20-day SMA within the Bollinger Band here, and then we've formed something here, and then we just go back to the downside. Again, this is just an idea. Let's see if this is going to be the case. Very quickly on CAC 40, look at this. I mean, another index in distress, and wow. I mean, this is just wow. So for CAC, the CAC index is still in positive territory for the year. Is this? No, actually, wait. No, that was the lowest point of this year. No, for the year, where is that? January. Now it's going to be in negative territory. Yeah, something like that. There we go. So this is where we opened up. Okay, so we're just bang on in this kind of area where we opened up this year. So long story short, for now, I think that we're going to wobble a little bit more around this hurdle. If we do see a retracement back up, just keep an eye on the 100-day EMA, which maybe will provide a little bit of resistance. If so, then maybe another decline could be possible. Let's have a look at DXY, ladies and gentlemen. Yes, enjoying the moment. Dollar is enjoying the moment, still pushing higher. But again, I will stick to my words that the U.S. doesn't need a strong dollar right now. The U.S. doesn't need disruptions in oil. They don't need higher oil prices, because if you're trying to get businesses inside your country to establish business, like other foreign businesses to establish companies inside your country, then you want to provide the best conditions. And if you're going to give them a strong dollar and and high oil prices, well then who will want to do that? Unless you really want to do the big weakening of China, and so that they would be forced then to buy LNG from you. Yeah, this is how they play the game. Look, for now, long story short, I talked about this previously, and I did mention this a lot of times. Last week I said, look, if we do pop above the 98 zone, I'll go to the upside. There we go. We went higher. My next target got reached, the 200-day EMA, together with the 99.49. And now the question is, can we actually go further north, and can we remain above the 200-day EMA? If so, then certainly more buyers here could join in. We could aim for the upper side of this little range. Well, and we'll go from there. Yeah, for now, if you basically try to apply technical analysis on this, overall this still looks bearish. Because why? Because look, if we're in the range right now, we look at the prevailing trend was to the downside. So the greater chance, according to the TA rules, for this one is to break out lower. That said, we need always to wait for the breakout. If we don't get a breakout, we don't do anything. So if we can get that breakout, wonderful. I will get a little bit more comfortable, you know, with either of the direction. For me, it doesn't, like in the short run, yes, we could still bounce around inside the range, but in the longer term, yeah, clearance through one of the sides here of this range is required. Let's have a quick look at VIX. Yep, we had a strong move to the upside, and I think we could see another push higher. But if it fails to reach, let's say, yesterday's high, near the 28.15, then yeah, I think a little bit of a decline here could be possible. Let's jump into the Forex world. AUDUSD. Now this one's holding. Oh, look at this. Look at this beautiful thing here. This one's holding off from falling. It keeps on presenting us with false breakouts here, but it's really holding off. You know, so holding off from falling down. So this to me says that maybe the conflict in the Middle East will be wrapped up. You know, so we should have seen major declines. We just see spikes to the downside. AUDNZD, another interesting pair. Look, it surpassed my 1.1895 territory. I talked about it. I said that this is my aim, my target, the 50% on the Fibonacci, which is drawn this way from the highest point of 2021 to the lowest point of 2020. And look, for now we're flirting with this 50% here on the Fibonacci retracement. So I would say if we somehow stay at the end of the month, we stay below this hurdle, I think maybe going into next month we could see a little bit of a retracement back down. AUDCHF, another interesting pair, pushing higher, and given the fact that we have seen this one declining for quite some time now, maybe, just maybe there could be an opportunity here for the bulls at some point. AUDJPY, now look at this. Let me just jump into a daily chart. Look at this. So we basically we pushed higher. We climbed above some key areas of resistance, like for example this one, the 110.79, and yeah, we drifted higher, but then we tested the area near the 112.09, and now from here we are reversing lower. So long story short, we fell back below this 110.79. So if we continue to trade below it, yeah, I think there is a chance if we move to the downside here. Let's jump into EURUSD, ladies and gentlemen. There we go. So I did a piece here on this pair for our VIP clients yesterday, and basically this is what I said, that we're resting near a very strong area of support. Yes, there is this upside line which is drawn from the lowest point of August of last year, but at the same time we're resting on the 200-day EMA, which coincides with this upside line. So it's a very strong area of support, and also we have this little hurdle here, the 1.1573. If we somehow break and drop and stay below it, then yeah, I'm gonna go further south. This little hurdle is the lowest point of January, and well, the previous lowest point of this year. However, we created a new low yesterday, so let's keep a close eye on this one, on this 1.1573 territory. If we clear it, I'll go further south. EUROCHF, this one's one of my favorite ones, and look, we're testing the lower side of the falling wedge, and the question is for me, like, I mean, can we see a breakout through the upper side? We had a few times the breakout, but now let's see if it can be maintained. Let me just double check something very quickly. Yeah, so okay. So yeah, we're seeing a little bit of reversal right now on EUROCHF. So the question is, can it be sustained? But look, it's one of my favorite patterns, which I keep on talking about all the time. It's the whenever we have a strong decline, then a gradual decline here, like with the help of some sort of like a falling wedge or a falling channel. It tends to break to the upside. However, as I keep on saying, and this is what I was saying last week, the week before that, you know, wait for the breakout, because otherwise you could get this, what we're seeing right now. So a further continuation. So while we remain inside the pattern, we could still move lower. We need always to wait for the confirmation break, and not only that, the pair needs to stay either out, needs to stay outside of this formation. EUROJPY, just very quickly drifting lower. Not much interesting stuff here. Okay, GBPUSD, ladies and gentlemen. So, apologies, didn't get enough sleep. I think, look, falling channel, right? I mean, loving the action, and I'm just going to stick to my words here. If we do remain above the lower side of the falling channel, I think there is a chance for a reversal back up here. Let's keep an eye on that. Yep, it's like I said, it's a very interesting one. Certainly there is, like I said, there is a chance of a push higher. But again, we need a stronger, key area for, we need a stronger reversal signal. Let's have a look at USDCAD very quickly. USDCAD is still holding on. So this is very, very interesting. USDCAD is still holding on, from breaking, or let's say not breaking, but staying above the upper side of this little triangle, the symmetrical triangle. It keeps on creating us these false breakouts, but not really doing much. So it seems like actually it wants to go lower. That's how it seems, And the problem what I'm seeing here right now is that, in a way, oil is strengthening, so it should help strengthen the Canadian dollar. However, the US dollar is also strengthening, on the safe haven bets kind of. So you have a problem. You have two stronger currencies. Normally I keep on saying, the battle of the weak, but now this is the battle of the strong. And, normally you should see Canadian dollar rallying, but yeah, it's at the moment not the case. It seems like that, because again, there is demand for the US dollar. USDJPY very quickly, what's happening here? Yep, continue to push higher. So far, so good. This is working out. I said that if we do push above the 156.29, I'll go higher. Very simple. There we go. Fantastic. USDCHF popped. Yep, it popped the beautiful triangle pattern. It broke through the upper side of it. And this is one of those examples which I keep on saying that you need to wait, ladies and gentlemen, because you need to wait. Although the pattern could be more bearish, and this pattern looked a little bit more bearish. There we go. You're getting your confirmation break here through the upper side of the triangle. So kind of shrugging off all the TA rules. So that's what I'm saying. You always kind of do the waiting a little bit. Okay, ladies and gentlemen, gold. Let's jump into that one. So yesterday, major decline, and I talked about this, and I said that when times go rough, I really doubt that gold and silver will remain, the safer bets, because everybody already piled up on gold and silver prior all these events. So, and you normally would say, you should buy gold because the stock market is feeling the heat. Apologies for that. You should be saying that this, of course. However, that's not the case, because again, I several times mentioned that whenever we have a problem, whenever we have an issue in the markets, you cannot hold gold for forever. You need to take some profits, and even the governments know that. Yes, it's a great investment tool, but you drag it all the way there, you make super profits, and then you basically sell it off, and because you need some cash, because if the stock market is is suffering, like in case of China, for example, right now, you know that you might suffer. You need some cash injections, and why not to take it from the place where which has stored a lot of value, and at some stage it will gain again. But for now, why not to enjoy some profits and help my economy? And this is where what we're seeing right now. So, long story short, we're seeing a reversal back up. However, the question is this going to stay positive, or are we just seeing a little correction back up before another possible leg of selling, because I'll put it this way: if we do fall below this 5,093 territory, I think that it opens the door to some lower areas. Silver, yep, similar story. We're seeing a little bit of a retracement right now, but hey, we had a good run. We had a great run to the 50s. By the way, if you remember last week, I did talk about this, and I mentioned these hurdles, that this is what I'm aiming for. You know, this is the last one that I did, and this is where I've pointed out that the 50% for me is the main target. If we do push and stay above it, then yeah, great, I'll go to the upside. But at this point, yeah, it's just moving, you know, right now. Initially it moved to the downside, and now we're seeing a little bit of a recovery, but let's see if the 38.2 will hold nicely. And by the way, look at this big strong reversal. It did go all the way to the 23.6. Not saying anything, right? There we go. I got a comment here. Data driven Z. If gold kept going up, that's going to be scary. I totally agree with you. By the way, thank you very much for your comment. Really appreciate that. So it's always nice to you know, to talk to viewers, because again, I always encourage, you know, everybody to communicate, because you know, you might have some ideas. I'm sharing my ideas, and you might have some ideas, maybe something that I haven't thought about. So hey, thank you very much. But in terms of what the viewer here is saying, that, you know, if gold kept on going, that's crazy. Yeah, it's crazy. It's scary. Well, crazy as well. But you don't get these, you know, if gold and the equity world are both simultaneously going higher, that's not good in a way. That's just showing that there could be some major problems later on. No problem. Yep, no problem. And that's where, like I said, that's where it kind of, like I said, the issue arises. So if you're planning to launch a major, you know, if you know that the stock market will fall apart, you know, that's why you see gold going higher, because again, everybody's piling up. And like, why are you buying so much gold if, you know, everything is good? No, you're doing that to prepare for the bad times, because you're gonna, when the bad times come, you're not gonna hold the gold. You're gonna sell it, because you need fiat money. You need to, you know, support your people, support your companies. Yeah, and in a way, it seems like the market had its fun already with gold and silver. Maybe we could see, like I said, further declines here, but I'm not rushing into things yet. I'm observing. I want to see what's going to happen next year. But yeah, if we start dropping back below the 20-day SMA here on the daily chart within the Bollinger Bands, or we fall below the 50-day EMA shown as the green light, then yeah, it's I think this is the worrying sign. Gold and silver ratio. So gold is still on the higher side against silver, currently around 60 times more expensive than silver. And but again, I talked about this area right here, ladies and gentlemen. Last week I talked about this 56 kind of 0.30-ish zone, and it beautifully tested. Look, for now, I think until we don't see a major blast here, major drop, sell-off or something like that, then you know, we cannot really, like, it's really difficult to say where this ratio could go right now, you know. So that's why I'm being a little bit more on the careful side. Ideally, I would like to see a drop below the 56.30, but you know, the market doesn't always give me what I want. And let's have a look at platinum. Of course, platinum was also selling off. And by the way, look at this. You know, I talked about this hurdle a lot, this 2,299 zone. I'm loving this area. This is the highest point of 2008, ladies and gentlemen. Guess what happened then in that year? Yeah, a little bit of a problem, a little bit of a financial problem everywhere. So, what can I say? For now, it's the is this exactly barrier that I'm watching. If we remain below it, I think that yes, there is a time for, you know, it is time for platinum to reverse a little bit more to the downside. For palladium, look at I like this metal a lot, to be honest, and we've tested the 38.2 again, and we're now drifting back down. So maybe we could end up traveling to that 23.6, and then we'll just kind of take it from there. Let's have a quick look at what's happening with copper. Yep, reversing lower. That's understandable. Just following the herd. Okay, sugar. Sugar is back above the 14 mark. There we go. Yes. So it's just bang on 14.05, but yeah, it's above 14. So somebody might say actually this looks like more like a bullish case here, But again, I always say don't rush into this, okay? Because I would rather wait for a clearance of the recent high, like for example this 1.1430, and then of course we can, look at this little hurdle, this 14.56. So yeah, it's all good, it's all fine here. We can go slowly, step by step on this, but certainly if you are, looking for another instrument to maybe pick up on, sugar, it could be an interesting option. Let's jump into oil, ladies and gentlemen. Look at this. We continue to push higher. This is where we, yesterday we traveled nicely, strongly to the upside. We cleared the 75.33. That was the high on Monday, and we're now pushing higher, right? Okay, we're pushing towards that 77.57 territory, which is, by the way, the highest point of June of 2025. Actually, I think, no, sorry, not the highest point of 2025. It's just the highest point of June of 2025. And the next target is the highest point of 2025, near 80.73. I wouldn't be surprised if we go there, but I'm playing a little bit the waiting game here, for now at least. Look, what can I say? At this point, like I said, everything is very unstable. Like I said, we're watching that Strait of Hormuz, what's going to happen there, but certainly oil is flying high, but I'm going to stick to my idea that US doesn't need a strong oil. You're kind of giving a helping hand to the other countries which are actually producing oil and exporting it. So, but on the other hand, if your goal is to somehow maybe damage China by, making oil prices higher, and also damage the European Union, because, the European Union does depend on a lot of imports. So, yeah, and another thing is that before Iran was, you could get some oil from Iran, you could get some oil, from that region in general, but now the only option for you is going to be the U.S. So, they're all playing chess here, and it was not a bad move. Well, did they win the game? No, not yet, but. It was a good move, a sneaky move, I would say. Yes, it's a moral move, but we're fine with whatever US does, right? Brent oil also pushing strongly to the upside. Look at this beautiful move here, boom, to the upside. $84 today, currently. So yeah, look, everybody's talking about 100, and let's take a look at the for this year's, no, sorry, not this year's, last year's. Yeah, that's the high of last year. There we go, the 2024 high, 92.14. Let's see if we can reach that area. And very quickly on natural gas. Now I do like this one. It did pop beautifully. It did make a strong move. It did make a strong move higher. It cleared the falling wedge pattern. I'm just trying to see natural gas on some other pricing here. So yeah, we did have a strong move higher here. We broke the upper side, and look, it's stalling a little bit above the broken falling wedge pattern. kind of seems like, what are you waiting for? You got released, right? Just go. Yeah, in a way, that's true. You could just go, but I think that they're maybe playing. They want to see what's going to happen with the Strait of Hormuz. In my opinion, I think that that's why we're not seeing maybe Nasdaq kind of really. Oh, sorry, Nasdaq natural gas really flying here. Um, Again, let's be very careful, patient, and certainly keep our eyes on this. It does look still interesting to the upside, but certainly we can see that the 20-day SMA within the Bollinger Band is providing strong resistance. If we clear that one, I'll go higher. Bitcoin, there we go, surpassing the 70 mark, 70,000 zone, ladies and gentlemen. Congratulations to those who are holding this one. And yeah, it's a beautiful thing here to watch. So let's see if we can stay above this area. By the way, this 70 kind of 1,854, 55 area, 55, let's put it this way, let's round it up here a little bit. We're currently trying to push through it. And I think that, yeah, it's at the time of like, while I'm talking right now, we're just bang on that level. Let's see if we can stay above this. If we can, great. I'm going to go further north. By further north, ideally it's this scenario that I like here, but I do understand that we need to take everything, carefully and seriously. So for now, let's just aim for the 50-day EMA together with the 70 kind of, what's the number here, 74,458 level, and then we'll take it from there. Bitcoin Cash. Also reversing back up, so good area of support right here, this 445.5 zone. We did violate it a few times, but still we're now pushing back above it. So yeah, we'll keep a close eye on this crypto because I do like it. I do like Bitcoin Cash. It's quite technical, so for now it's doing the right thing. Ripple is stuck. It's not really doing much, to be honest, and yeah, it's look, we have this little short-term downside line, so I'm gonna wait for clearance at least of that downside line before getting comfortable with some higher areas. Ethereum, okay, this one is trying to make its way up again. It's kind of doing the Bitcoin thing. So let's see if it succeeds in doing that. And I would say this way, that for now, if we do push above the 2,168, I'm going to lean towards the upside. Very quickly on Ethereum Classic, similar story as with other ones. Actually, there's not much to say here. Now, Litecoin looks a little bit better here. There we go. We're approaching this 56.83, something like that area, 84. If we get a nice clearance of this, I'll go to the upside. Dogecoin, very quickly. Dogecoin is doing good, I think. It's holding off from falling below the 0.0879 zone right here. So yeah, it's so far so good. It's still somewhat positive. Polkadot is trying really hard, trying to reverse back up here, as you can see. Ideally, in my ideal world, I would like to see this one actually more of a as a bullish flag here. We have our pole, we have our little correction back up here, back down. So now let's see if we can confirm a falling, not a falling wedge, but can we confirm a bullish flag right here? For that, I need to see a push above the. Well, this is the thing. I think I need to adjust this a little bit. So I need to see a push above the 1.6946. If I can get that, great. I'll go to the upside. And finally, Tron. This one is kept beautifully above the 0.28 territory. So fantastic result here. There we go. We're popping back up here. We're breaking this downside line so we can get rid of it. No longer needed. So at this point, I think that I will stick to the upside, even also with the fact that we're currently pushing above the 20-day SMA within my Bollinger Bands here. It's not a guaranteed thing that it will go higher because it pushed above that hurdle. No, I think that just an extra little thing to help us out, in our analysis. So let's see if we can stay above it. If we can, I'll go further north. Ladies and gentlemen, that is a wrap. That is a wrap. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everybody. Data driven, Z7J. Really thank you very much for your attendance. Really appreciate that. So I hope you found it useful. I hope you found the session useful. And as always, ladies and gentlemen, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade and everything will be fine. And I shall see you on Friday. Bye for now.